If you clicked on this video, it's most likely because you are interested in new construction. So whether that be building for yourself, for your family, or maybe as an investment. So today we are going to walk through some of the requirements that we faced and had to jump through when getting construction loans for the properties that we built behind us.
So the total construction loan amount that we got was about $495,000, give or take. And that was at an interest rate of about 8% at a 16-month duration.
So obviously $500,000 is a lot of money. It was to date the largest construction loan that we had taken out, but we weren't scared of it because we did have some key factors that we looked at.
The biggest things that you have to look at to see if it's even something that's financially feasible for you is your income. You know, that's the biggest thing because the lenders are going to require interest payments. It's actually a pretty cool calculation. I take the total loan amount, we take the interest rate. I'm just going to do 12 months. We want to make sure we have at least 12 months of interest payments. So $495,000 times 8%, right? So that gives you your yearly interest if you were to take out the entire construction loan at one time, you know, that's not what's going to happen. You know, you're going to get it in draws. But if you were to take out the entire construction loan at one time, you're going to be paying 8% interest. It's an interest-only loan. Do I have this in savings, you know, or do I have income to comfortably cover this amount per month? So $495,000 times 8% divided by 12. So you can do the same thing with your loan amount.
So we figured out what the maximum payment would be if we were to have like drawn all of the money with the interest rate. And
Correct.
As long as we were comfortable paying like that max payment for every single month, we were good with it.
Exactly. So once we figured out that it's something that was feasible for us financially, we wanted to go out and find, you know, lenders. And we spoke to a couple different lenders, and there are some things that varied between the lenders that you guys should know about.
Some of the main things to consider are lenders will have either fixed rate construction loans or some of them will have a floating/adjustable rate. We did have a few different options to compare, and ultimately we've done it both ways on our construction projects. It really just depends on where you think interest rates are going in the duration of the time that you're building, and kind of figuring out what would be beneficial to you. Some lenders are going to try to have a prepayment penalty in your loan as well, so that's something else to consider. And finally, I would just say, know that your experience is going to differ between banks that you talk to. Thinking back to the application process, what were some of the documents and items that you remember us submitting to these lenders?
We had to submit our tax returns. One of the things that they make you do, if you've never done this before, it's not difficult, but they make you submit a financial statement, a personal financial statement, where you have to list your income, your liabilities, your assets, proof of income. And if you're self-employed, you know, your business tax returns as well, and your business profit and loss.
And ultimately, they're going to pull credit as well.
Yeah.
So just make sure you've gotten good credit. So what was the process of determining that $500,000 loan amount?
We have to go to the beginning, and it starts with the land, right? So the first thing was the land. We have 2 parcels. We bought 2 parcels. Each one of those parcels is zoned for a duplex. We thought about the best use of the land, and that was to build 2 duplexes. Our new construction budget maker was so great at helping us figure this out, purchased the land under that price. So already we were doing good. We paid $80,000 for both of the parcels. We had to figure out, okay, what can we fit on here, right? So we designed the plans, we designed these buildings, and that gave us a good square footage. And so all we had to do was, again, plug that in to the budget generator, our square footage, and our build cost per square foot. And the budget generator generated what our total budget should be as well as breaking down the major components of what our budget should be, because we had to turn this into the lender so that the lender can create a draw schedule for us. And the budget generator just made it so much easier, just so easy and just so clear to see.
Why don't you talk to us about how we manage the expenses and track through construction? Because having that a loan amount and that goal up front is one thing, but making sure that you're not blowing all of that money too soon is a whole nother ball game.
Tracking the expenses is actually one of the most beneficial thing that you can do when you're building. Not only does it save you just headaches, but it can, basically for accountability, if you're building for somebody else, or, if you're building with a partner or whatever, you can show progress, but you can also figure out how to move money around, right? Like if something comes in under budget and, something surprising just sprung up, you can see, I can take money from this section and put here because it actually came in on the budget here. So tracking expenses is just super fantastic, and I actually created a tool that helps me do that. And I put in my estimated amount that I want to spend on a section, and then I come in when the section is done, and I put in my costs that I actually incurred, and I can see if I'm over budget or under budget for that particular section. If you're going to keep the property, you can actually use this expense tracker for cost segregation.
The main message that I would say is the most important is to track your expenses throughout, like from the beginning as you go. Make sure that you stick with it. These properties are obviously finished now and they are rentals, so we no longer have our construction loan. Why don't we talk a little bit about what our loan is now?
After the construction, we had 16 months, but we actually finished building in about 6 months. What we did, because the interest rate that we got on the construction loan was 8%, but the market rate at that time had come down. So we built it really quick in 6 months, and then we went ahead and refinanced. And we used what is called a DSCR loan. Basically, it's a type of loan where the income of the property is what qualifies you or qualifies the property to get funded, basically. So that's what we did. So it's not solely based on your personal credit. You still have to be a personal guarantor on it, but it's based on the rents and the income of the property. So that's what we did, and we're able to get much better interest rates. And we got out of the construction loan. We could have actually kept the construction loan for 10 more months, but there was no point in keeping a interest-only higher interest loan when we could refinance, being that we got them rented. For me, initially, anytime I'm signing like loan documents, my heart is always racing. I'm always nervous, even though I know it's fine and I can pay, and I'm sure it's probably normal and maybe other people go through it, I don't know, but it's not as scary as you might think if you're thinking about getting your first construction loan. Like I said, do the calculation. Just make sure that you have the income savings to cover those payments, those monthly payments, using the calculation that I had said at the beginning of the video. You're not going to pull out the whole loan in the first few months. No, it takes time. So, there might be even some months where, your payment is so little. You just want to make sure you have all the funds ready somewhere so that you're not scrambling.
So I feel like that pretty much sums it up for this video. If you guys are interested in learning a little bit more about how we determined that building our duplexes and our fourplexes were going to actually work and cash flow, check out the video that I've put on the screen. We did a full breakdown and show you the figures that we look at before deciding a project is worth pursuing. If you guys have any questions, leave them in the comments below and we will do our best to get to them. I'm Nicole Nark, real estate broker, helping you buy, sell, build, and invest, and I will see you in the next one.